for them. But now they are selling this to pension funds and institutions and various investors who are sensitive to rates. And so when rates are, 5.5%, that's great. They're getting tons of yield. But when rates start to come down, many of those investors are actually going to offload that debt because now that rate is not going to be attractive to them. And so the question is, who is going to buy the US debt, right? How bad will that debt suffer from a pricing standpoint if people now holding it are rate sensitive versus historically they've been rate insensitive?
The U.S. Securities and Exchange Commission approved many spot Bitcoin exchange-traded funds in 2024, boosting crypto bull market expectations. Bitcoin hit record highs in March, more than a month before the biannual halving event, boosting bull market optimism. This was a positive oddity because Bitcoin always reached new highs after the halving event in previous cycles. Anthony Pompliano, a prominent YouTuber, is optimistic despite the cooling of crypto asset values. Michelle Massisi-Pomp noticed that Bitcoin performs poorly if people expect the Fed to decrease rates less regularly or severely. Summer and sideways movements contribute. Summers are explosive. From January to May, and Q3 and Q4 are explosive, parabolic moves during bull markets, like the rest of the space. Pomp anticipates 3 catalysts that will instantly alter Bitcoin and crypto asset prices later this year. First, when large national wirehouses list BlackRock's IBIT and other U.S. spot Bitcoin ETFs, institutional interest will rise. Pomp expects sovereign wealth funds and country states will buy spot Bitcoin ETFs and the crypto asset. PP believes the U.S. election, especially a pro-crypto Trump, is the final trigger. PP predicts a Fed and other major central bank rate drop. Like this video, subscribe to the channel, and enable post alerts for more. All of your YouTube algorithm-friendly actions boost channel growth. Thanks and enjoy the video.
There's a whole bunch of factors that go into price, right? And at the most basic level, the price goes down because there's more people selling than buying. And so the question becomes, why are more people selling than buying? And really, I think some of the things you talked about are key drivers. If people think that the Fed is not going to cut rates as often or as severely as they previously thought, then assets like Bitcoin tend not to do as well. With that said, I think interest rates going from 0 to over 5%, but still seeing Bitcoin's price go from 15, 20,000 all the way up to 60 or 70,000 shows that it's not all interest rates. People are still willing to allocate to the asset, even with high interest rates. And then I also think that there's this element of we're in the summertime and kind of these sideways summers. If you look at the stock market, historically, people have always said invest till May and then go away. And I think that we've seen that in Bitcoin and crypto over and over again, where there's these explosive periods of price movement from January to about May. Summer is usually sideways. And then towards the end of Q3 and into Q4, we get these kind of explosive parabolic moves again during bull markets. And so I don't think necessarily this is something that should be surprising. I think people who are coming into the market for the first time, specifically people buying the ETFs who maybe haven't had Bitcoin before, they haven't seen the volatility, this may be something that is much more volatile than they're used to. And therefore, it feels like a 15% drawdown is kind of Armageddon. But in the Bitcoin world, we usually see 30% drawdowns in bull markets, multiple ones. And so this is actually a pretty small drawdown in comparison to those historical averages. I think there's a couple of different things. First, seeing a couple of large organizations go ahead and allocate to the Bitcoin ETF. Estimates right now are about 80% of those ETF inflows come from retail. And so we still have yet to see very large organizations, very large RIAs. There's still many trading platforms where the Bitcoin ETF is not even turned on yet for kind of private wealth clients. And so seeing some of that happen, I think, can be a potential catalyst. I also think seeing a sovereign wealth fund come out and say that they've started to buy Bitcoin, whether it's via the ETFs or spot, would be quite impactful. I think that seeing President Trump get elected, as it stands right now, he seems to be the more pro kind of Bitcoin, pro crypto candidate versus the current Biden administration. Maybe that changes, but given what we know now, Trump being elected, I think would be tailwind. And then lastly, frankly, I think there's this element of as we head in towards the end of the year here, the Federal Reserve is going to have to start making some decisions. And, recently it came out, David Rubenstein, the co-founder of Carlyle, said that he doesn't believe the Fed is going to make any interest rate cuts before the election. They don't want to kind of meddle in politics. There's many other people who believe, no, that's exactly why they're going to cut rates, kind of going into the election. Regardless of what they do, it'll have an impact. And so if they cut beforehand, that's likely to be positive for Bitcoin. If they wait till after the election and then cut, that'll be positive at that point. But regardless of whether it happens in August and September or it happens in November and December, it is very unlikely, in my opinion, that we have seen the top of this Bitcoin bull market. And it's much likely that we will go higher at some point over the next 18 months.
According to Pump, everything points to higher prices and more people using Bitcoin and other cryptocurrencies in 2012 and beyond. The markets are closely watching the Federal Reserve's actions, and as soon as it shows even the slightest sign of loosening its policies, prices will go through the roof. There is no doubt that the Federal Reserve will have to change how it fights inflation very soon, even if it doesn't reach its 2% target. As many experts have pointed out, this is an election year, and Fed Chair Jerome Powell's unofficial job is to help the current president win re-election. The Joe Biden administration has already gotten a lot of bad press for its bad economic policies. As the election gets closer, the administration will need to loosen its strict rules in order to win back the public's favor. This is exactly when the crypto bull market will take off. During his interview with McHugh, Pump also talks about the rules and regulations that surround crypto and how politicians on both sides of the aisle and some of the most important and well-known names on Wall Street are slowly coming around to it.
I have met with a lot of different organizations over the years. I've met with central banks. I've met with sovereign wealth funds. Many of my friends have done the same thing. It has been very clear for years now, going on 6-7 years, that these organizations are looking at Bitcoin and the broader market. They're trying to figure out what should they be doing, if anything. What we know from a kind of public stance perspective, there are now multiple nation states that have had, dipping their toes in to the market. They're buying Bitcoin, down in El Salvador. There's a lot of countries that are now starting to do these joint ventures where they're actually doing mining. So you see in the UAE, you see this in various African countries. You even see it in the United States to a degree where people are using certain power sources to go ahead and mine. And then I think you're also starting to see in countries that maybe people wouldn't think about, you're seeing politicians come out and say that they own these assets. And so whether it is the actual government themselves or it is the individuals who govern holding the asset, I think that really has an impact on kind of the population and what they're going to do with their financial assets. And so having a sovereign wealth fund come out and say that they've bought Bitcoin, I don't think is something that's going to be shocking, in the sense that, of course it's going to happen. But when it happens and which sovereign wealth funds are the first ones, I think will have an impact and be a catalyst. I also think that there's a very interesting conversation around the fact that central banks around the world have watched what the United States has done from a financial sanction standpoint in the Russia-Ukraine conflict, and the stance that the United States took towards Russia and some of their assets, I think has caused a lot of central banks around the world to say, well, maybe we should diversify some. Maybe we shouldn't sit in US dollars or, completely in treasuries. Should we be buying gold? Should we be buying Bitcoin? I do think that the kind of sanctions hedge risk is something that people, are kind of discounting, but will definitely play into this calculation for many of these governments in the coming months and years. I think that that's probably unlikely. One of the interesting things, if you take China, for example, China's been offloading a lot of the, kind of U.S. back reserved. In lieu of that, they have been buying some gold. And so people would say, oh, they're de-dollarizing. They're trying to get out of the dollar. But if you go and you look at, dollar usage for settlements of bilateral trade, actually dollar dominance has been increasing. I think the last numbers I saw was it was hovering between 58 and 60%. And so in a time where people are talking about de-dollarization, actually the dollar has been being used more often for that bilateral trade settlement. And so it's this very complex kind of analysis. Now, what I will say is, China selling that US debt, who are they selling it to, right? If you think of central banks, they are very rate insensitive, right? They don't care if interest rates are at 2% or 5%. They're buying it because it's a reserve asset for them. But now they are selling this to pension funds and institutions and various investors who are sensitive to rates. And so when rates are, 5.5%, that's great. They're getting tons of yield. But when rates start to come down, many of those investors are actually going to offload that debt, because now that rate is not going to be attractive to them. And so the question is, who is going to buy the US debt, right? How bad will that debt suffer from a pricing standpoint if people now holding it are rate sensitive versus historically they've been rate insensitive? And so I do think that this entire kind of analysis requires you not just to look at US dollar denominated reserves, gold, and Bitcoin. It's also getting into the mind of what's going to happen, right? What is the perspective of these people when rates go down in the future, and how are they going to change that mix based on those rate changes? Will sell, right? They're obviously holding debt today because it's paying over 5%, and that's a very attractive rate. But as that rate goes down, they are going to look to move somewhere else. And as markets work, rates come down and risk assets will take off. Now, what's unique about this situation is that rates were hiked at the fastest pace in history, yet stock market is at near all-time highs, if not all-time highs, and Bitcoin has been flirting with new all-time highs as well. And so when you look at these, it's basically like investors have said, we are going to go into the market and we are going to allocate to these asset classes, and we don't care what the rates are, right? The rates are a lie. I don't care that we're in a high interest rate environment because inflation is not under control. I recently wrote about, Larry Summers and a group of economists came together and they did this big study, and they said, well, one of the things that is not being included in the CPI analysis is the cost of borrowing.
In related news, Bernstein analysts rejected claims that spot Bitcoin ETFs are done in a research note sent to clients last week. The 13F filing showed that institutional participation in spot Bitcoin ETFs was just 22%, with retail investors still leading the way. They also claimed that major wirehouses and large private bank platforms are close to approving spot Bitcoin ETFs. We think hedge funds drive 36% of institutional allocation and the basis trade. According to our conversations with investors dabbling in Bitcoin ETFs, the next step after the basis trade is evaluating long positions. Financial advisors' actual demand and 13F disclosures show mostly small mid-advisors with 0.1 to 0.3% of their portfolio allocated to Bitcoin ETFs. We think larger advisors approving ETFs insignificant. Allocations will fuel growth. Existing portfolio headroom like pump analysts predict more companies to use MicroStrategies. Bitcoin as a treasury asset strategy, as the new FASB accounting rules make it easier for corporations to hold cryptocurrencies on their balance sheets. They added that all of these will contribute to significantly higher Bitcoin prices by the end of the year. Do you agree that the 2024 crypto bull market is only just beginning? What do you think will trigger the next run? Leave your comments and insights below. Like this video, subscribe to the channel, and switch on post notifications for more videos like this. Thanks for watching.